Mr. Kush Bohra, founder of kushbohra.com. Kush, thank you for giving us time here on News 9, sir. I mean, what a phenomenal recovery we saw in the last 1 hour of trade. I think yesterday's session had had something for everyone, right? The bears, the market initially after that spike because of positive global cues dragged, and then we saw that 350-point recovery. I think most of us were surprised. Now this morning we are holding above that 20 DMA, which we did cross after a gap of 7 sessions. Do you think this recovery can continue if that mark is held? Because again, it's very close to where we are currently. What's your assessment of the market, sir?
Hi, Suyash. First up, a very good morning to you and all the viewers. Well, you're right. But the way I would look at it is, see, we all know what happened in terms of the sharp recovery. I know that before that. What I'm more concerned about is, why did that happen? I think what is happening is that this market is starting to mature, and there is no easy money left on the table for option writers. So that is something that you'll have to be a little wary of. All your viewers who are whose strategy is option writing will perhaps have to relook as to how the PNL is looking and how they would want to perhaps adapt their trade setup going forward. Because see, what's happening is that a lot of the times in the last month and a half, wherever you've got a strong option base, be it call or put, those levels are being taken out rather easily, but with these wild moves. So that's a bit of a concern. Now that said, the way to go about this market is actually a buy on dip, because even a 1,000 point dip, that we saw is turning out to be a buying opportunity. We've recovered quite a bit of lost ground, almost 5 to 600 points. We've recovered in the last couple of sessions, rather 5 to 6 sessions. So on the whole, you would, even if you get stuck, you would want to get stuck on the long side of this market and not the short side. So that's how we play from a near-term perspective. Let's say for a week or two, 20 to 600 and 20 to 200 is the zone for Nifty. 48,400 and 47,500 is the zone for Bank Nifty. So anywhere closer to the support zones, I would consider going long on Nifty and Bank Nifty.
And interestingly, FII net short position in index future also currently stands at over 2.5 lakh contracts, which historically speaking is super high. Meanwhile, our domestic investors, the HNIs, NNIs, they are net long 2.8 lakh contracts, which, I mean, correct me if I'm wrong, the highest ever, right? Typically in such a extreme positions, as you were also mentioning, the locals tend to come out on the better side, and we see some bit of a short covering from FIIs. Is that also, something that could happen in the markets, Kush?
That's a very strong possibility. My only concern is that the FIIs are perhaps waiting for the election event, to be out of the way, or maybe get some more clarity in terms of the exit polls, as and when they come about. So I think, the FII covering will kick in. It's only a matter of time as to, when and from what point does it really come in. But on the whole, having such a strong short position in the market from the FII perspective has historically turned out to be a blessing. And when the levels are so high and when the positions are so high, you would expect the momentum and the move also to be high in magnitude. So a 22,800, 23,000, given a favorable election outcome, would perhaps be on the cards. So on the whole, I think the market is poised for a sharp up move. Perhaps it's just a matter of time. May happen on the day of the election outcome, or might just kick in a little before that. So on the whole, the buy on dip strategy is very much intact. The data point that you mentioned is also a case in point, in fact, to go long on this market at the support zone.
All right, and Kush, you mentioned that elections, of course, are adding uncertainty to our markets. I mean, I think this at this point, somewhere around the 320 to 350 seat win for the NDA government is being, expected by the markets. Now, if there is a big surprise, both on positive or the negative side, let's say BJP ends up, the NDA government, NDA ends up winning, over 400 seats, or, they end up winning under 300 or around the 300 mark. If there is a big surprise, how much percentage move can we expect in indices, sir?
Well, that's a very good question. I think any big move, and by big I mean anywhere from 5% and beyond, would come in only on the downside. See, the market is already poised and ready for an upside move. Considering that the current government to continue. It's only a matter of number of seats. How much do they get? I think that's more of a concern. So I think on the upside, if you ask me, there isn't really that big a move that I would expect. Although markets could react favorably there also, but I think a bigger move could come in on the downside if there were a negative surprise to come about. So that is something that you'll have to brace for. By the looks of it, by the setup, doesn't look like that. If you go by the gray markets, they are in fact predicting anywhere from 370 to 400 seats for the NDA alliance. So that could also perhaps play the part. You can't really be sure about these things. But as I said, a bigger surprise, if at all, if it were to come for the market, would be on the downside. On the upside, I think a lot of factoring in is being done and the continuation is expected. So yeah, perhaps the 22,800, 23,000 should be where the market would hold or perhaps head to if you get a positive surprise on the upside.
Good morning, Kush. Now you spoke about buy on dips. HAL, which reported their results yesterday and a net profit jump of 52.2% year on year, revenue jump of 18%, expenses coming down 8%. That is in a bit of a correction. It has given returns of over 190% over the last 1 year, but slightly going in the negative today. Investors cashing out, you say?
Hi, a very good morning. Well, it just incidentally so happens that, just 3 sessions ago, we had released a call on HAL on our advisory service with a target of 4,400. Now, that was very comfortably surpassed yesterday with the stock hitting a high of 46.56, right? So, we are still very bullish on HAL. We believe that this momentum will continue, perhaps to a 4,800 as well, and it fits perfectly in line with the buy on dips discussion and the theme that we are having right now. Any dip towards 4,400 should be taken as an opportunity. From there on, the risk reward ratio will be favorable. What we are seeing today, as you rightly put, is just a bout of profit booking. If you see, about 8 odd sessions ago, the stock was languishing at 3,700. The reason I say languishing is because it broke the 20-day moving average and spent some time there, and then a vertical rise all the way up until 46.50. So a nearly 1,000 point move on a stock in a mere 7-8 sessions. A bout of profit booking was expected. So anywhere close to 4,400, it would again make an attractive buy, and anyone who's looking to enter a fresh should consider entering around those levels.
All right, HAL can be looked at around 4,400 levels. I mean, after that 10% sort of a rally, 2% correction is, I mean, nothing. A little bit of profit booking, and I would say shedding of weak hands, and you'd like to see that some bit of consolidation and perhaps a pullback towards that 4,400 mark, which, as Kush puts it, could be a good entry point on HAL. But apart from that, Kush, Vodafone Idea also reported their fourth quarter numbers after the market hours today. The net loss for the telecom operator widened to 76-75 crores in Q4 versus 6,419 crores in the previous year. Revenue and EBITDA improved marginally. Average revenue per user, ARPU, also improved slightly from about 145 to 146 now, and 135 in the previous year, primarily aided by entry level plans and subscriber updates. Now, speaking of entry level plans, Vodafone has also launched a prepaid plan of just rupees 1 yesterday. And even this morning, sir, the stock is up about 0.75%, but has been pretty much in that range of about 12 on the downside and 15 on the upside. But considering that there is a lot of buzz around the telecom sector and specifically Vodafone Idea, what's your view on the stock?
Buy Bharti Airtel.
By Bharti Airtel. All right, all right.
Let me just give you a quick 30-second explanation on this. Um, this is hope, this is promises not delivered. This is a very overcrowded trade. Vodafone Idea has been in the news, as you said, for all sorts of reasons, but hasn't really translated into price action. Now, 12 to 14 is a fair range that you mentioned. Perhaps I'll push it a little higher and say 16. As and when the price moves beyond 16, I know it's a slightly higher range, but if it moves above 16, sustains above that, is when I will consider any kind of long trade. Up until then, this might perhaps be one of those stocks where it continues to trade in a range, gives you a hope and then fizzles out. So let the price action confirm that indeed there is something happening on the on the right side, and then we'd consider. Opposed to this, if you see Bharti, it's been making strides, it's been adding on to the gains, and that is a very clear pure play on the the telecom sector. which has delivered. So for me, Bharti would be a very clear choice, especially when you compare it to the likes of Vodafone.
All right, Bharti Airtel looks better in that telecom space. Vodafone Ideas, I mean, more price action needs to be seen. We need to see that breakout from that zone. That's a verdict coming in on Vodafone Idea. The markets, they are, they have moved into the green. Nifty, as we speak, is at around that 22,400 levels. It's above that currently, moving higher as we speak. The broader markets are, also holding on to their morning gains. Both indices are up in the positive, about 0.5% higher. India VIX, it has come down slightly from their intraday high. It was trading at about 20.43 odd levels. Currently is just holding above that 20.02 mark, and the recovery again is looking strong, and the broad based recovery is looking strong because what we are seeing in the broader markets. And Kush, I'll come to you on this. The broader markets, I mean, one would expect them to remain rather choppy compared to large caps in this time of uncertainty, but the recovery has been very strong over there, sir. What's your take?
So that must tell you something, right? And that's a very good point that you bring up. That often the mid cap and the small cap spaces are the indication of what the market mood and sentiment is. Right now, we are not seeing those kind of cracks, in the mid cap or the small cap space, suggesting that there is a fair degree of confidence, on the election outcome. So I think we'd continue to remain long. If you have long positions, continue to remain long. Fresh capital allocation, perhaps you could wait up a little, and the only reason is volatility, nothing else. So perhaps just to cash in on the volatility that's there in the market, buy at lower levels. That's when you want to deploy some money, in the mid cap, small cap names. But otherwise, if you've got an existing position, continue to hold. Select good names where fundamentals are strong, the price momentum is strong. Will, I think, continue to do well. So you'll have to be selective here, but on the whole, I think the mid cap and the small cap are giving a good sense, of the markets right now, and perhaps the traction will continue to remain, on the positive side for, let's say, the coming few years, I would say, not just months and quarters.
Kush, I'd like to pick your brains on a sector that had suddenly started to do well with the revival of China, and that was metals. Even today, it is up, albeit slightly. JSW Steel posted their results yesterday, and a bit of a concern there. While SAIL over the last 1 year has given returns over 100%, almost 130%, Tata Steel over almost 60%. JSW Steel has been a bit of a laggard, and in the metal pack, while copper and zinc and even manganese seem to have done very well, steel has not been there as much. What do you make of the metal pack going forward?
And to add to what Amit was saying this morning, we had data coming out from China. I mean, the consumer spending, retail sales remain low, but industrial output that picked up much ahead of expectation. It was up 6.7% for the month of April, and indicates that factory output and external demand continues to remain strong, which again would mean that China will continue buying more commodities, and again another factor that metals could be in action, right, Kush?
See, absolutely. The only concern is that this is a very volatile space. Now, if you can digest the volatility, some of these names that Amit mentioned have actually been doing rather well. The only thing is, if you've got a near-term stop loss, then that tends to get triggered. But if you are looking at these from a positional standpoint, a lot of these stocks for the last year and a half have actually delivered. So for me, I think that will remain the theme, going forward. Even back home, in India, there are a lot of, or rather, there's a lot of demand for, some of these names. So not just stocks, I mean, the product as well. That is adding, but we know how big, a factor China plays. But the China factor is not entirely reliable, is it? Although there is the economy starting to pick up, there are news about the, boost that the government is looking to give. But you never know how things might pan out from the China perspective. That said, for me, the view is very clear. As long as you can handle the volatility, these stocks should be in your portfolio. Hind Copper is one stock that we've got on our radar. Tata Steel is one, and then you've got SAIL. As Amit just mentioned. So some of these names continue to shine. No pun intended. But buy them on dips, or as I said, if you're buying them in a leveraged setup, then make sure that you have your position sizing in check. On the whole, the setup looks positive, but it's just the volatility that one needs to factor in when it comes to some of these names.
Just the volatility that one needs to factor in. Kush, before we let you go, what are your picks for our investors today?
Sure, a couple of them. First one is Amara Raja Batteries, or rather Amara Raja Energy, as it's been rechristened. The stock's actually done rather well in the last couple of sessions. Even today, if you see, the stock's doing well. 1155 and 1175 are the levels that we're looking at. I think the target one's already hit, so perhaps you would want to consider it for target two. The initial stop loss suggested was 1155. You could bump it up to 1135 now. The second one is AB Capital. This stock too in the financial space has been seeing some traction, taking support at the 20-day moving average and inching higher. So AB Capital for a target of 232 and 238, and the stop loss here would be 218.
All right, those are the top two picks from Kush Bohra in the market like this, which is super volatile, but we are seeing some bit of a recovery, and perhaps Amara and AB Capital could be those winners in this recovery. Sir, thank you for giving us time here on News 9. Always a pleasure speaking with you.
Likewise, and have a great weekend ahead.
You too, sir.